Okay, I'm back. 15.3. Let's go OWP 15.3. Here we go. Let's go work together. So this section is about assets. Every asset that you use for your business will lose value over its time. There is a estimated salvage value, which means what is it worth at the end of its life. And there's a useful life, which means how many years it will be good for. There are books on each asset basically that say, what this color printer would be worth at the end of its life and how many years it would probably work. So we're going to calculate the annual depreciation, which means how much you'll write off each year. So we have the original cost of that printer was $950, so we're going to plug that. It should be worth $150 at the end of its life. So you're going to make sure that you never go below that salvage value, which means we're going to be able to depreciate $800 off of that asset. Because if we go to sell it after 5 years, we still should get $150. And then it's going to be good for 5 years. So we're going to do $800 divided by 5, $160 a year. So that is the annual depreciation. You would divide that by the number of months in the year, and that's what you would depreciate for that year. And the reason I'm saying that is because if you would divide by 12 and get a per month, and then you would multiply it by the number of months in that year. So if you bought the asset in July 1st, you would have July, August, September, October, November, December. So you'd have 6 months. So you could only depreciate it for 6 months that year. But let's go ahead and grade this step. All right, let's go to the next step. So now we're going to see what the book value is going to be after the second year. So our original cost was $950. We're going to plug our depreciation of $160 each year. So the book value after year 2 is going to be $950 minus $160 minus $160 equals $630. Okay, because we want to remember, we want to make sure that at the end of the 5 years, it's still worth $150. You'll never go below salvage value. Okay, let's go to the next step. And the next step is basically doing the depreciation adjusting entry for the end of the year. They will give you this number for all of the problems, but just know that what we just did will be the calculation for it. So they're telling us that the depreciation expense is $2150 for office equipment and $7440 for store equipment. So we just use those numbers. We don't need to do any calculation. So we're going to come down here. It's still the 31st. There's going to be a depreciation expense for each of our assets. So if you scroll down your expenses here, we have depreciation expense office equipment. We could triple click that, copy that, come down to our journal and paste that in. Now you just want to make sure that you're doing office equipment first. Okay, so that is for $2150. And just like the other ones, you're going to debit your expense and credit your asset or your contra asset account. And in this case, we are crediting our contra asset account. So if we come up to our assets, we have a contra asset right here of, let me get this, triple click this, accumulated depreciation. So technically on the books, that asset will always be worth the cost, but you're going to put the accumulated depreciation against it, and then you would have the true value. All right, so our next one is 31st again. This one is going to be for the store equipment, the 7440. So I'm going to go back up to my chart of accounts. I'm going to get this. Triple click this one real quick. I'm going to copy that. And then I'm going to go get my contra asset account for that. And like I said before, they're just going to give us that number, and that number is 7440. So this one, this step is pretty easy. They are going to give us the numbers, but you just need to know that you'll debit your expense and credit your contra asset account here. So let's go ahead and grade that. And that is it for this section.